Hello everyone, this is Crypto BitLaw here with another blockchain legal brief, and today we're going to discuss a recent Ethereum DeFi protocol, Inverse Finance, and how it was exploited to the tune of millions of dollars. So we're going to do an overview and analysis of this exploit and then discuss any possible legal ramifications that could result from this hack. But before we dive in, please, if you enjoy this content, hit that like button and subscribe to our channel. We'd really appreciate it. And with that said, let's jump right on in. Okay, so we're going to begin here with the overview of this exploit of DeFi Protocol Inverse Finance, and then we're going to go more so into the technical aspects of how the hacker was able to pull off this hack. So beginning here, we could see that CryptoBriefing.com reports that millions drained from Ethereum DeFi protocol Inverse Finance. Inverse Finance was hacked on Saturday. The hacker has already moved over 14.6 million through Tornado Cash. They say, another day, another DeFi hack. Inverse Finance is the latest Ethereum protocol to suffer a multi-million-dollar exploit. Ethereum's DeFi ecosystem has suffered another major hack. Inverse Finance, a stablecoin protocol that focuses on capital-efficient yield generation, was drained in an exploit early Saturday. PeckShield, one of the crypto industry's top security analytics companies, alerted the Inverse team to the hack on Twitter minutes after the exploit occurred. PeckShield explained in a series of tweets that the hacker deposited 901 Ethereum to the protocol and used an Oracle manipulation bug to manipulate the price of Inverse's INV token. They then used the INV as collateral to borrow assets and drain the protocol. Etherscan data shows that the hacker drained millions of dollars in YFI, Yearn Finance, wrapped Bitcoin, and Inverse's own DOLA token from the protocol, and then used decentralized exchanges such as Uniswap to trade the assets for Ethereum. There's a link to an Ethereum wallet that was connected to the hacker, and it's already siphoned 4,200 Ethereum worth around $14.6 million through the transaction mixer Tornado Cash in a bid to cover their traces. The wallet contains just over $250,000 at the time this was written 2 days ago. The Inverse team acknowledged the hack in a tweet, but has not yet shared a full statement. They stated, quote, "We are currently addressing the situation. Please wait for an official announcement," the post read. And there was an update. The Inverse team has paused future borrows on its Anchor platform and said that it will be submitting a governance proposal to ensure that affected users are fully reimbursed. Quote, "The plan to be proposed to governance is to ensure all wallets impacted by the price manipulation are repaid 100%, a tweet read. It's also offering the hacker a generous bounty for the safe return of the funds. The Inverse token has plummeted in the hours since the hack. It's down 17.1% on the day, trading at about $314 at the time this article was written. All right, so now to get a more technical analysis of how this hack occurred, we could turn to this wrecked news article, entitled Inverse Finance Wrecked. And it states, Inverse Finance got flipped for $15 million. This attack got the experts' attention. A professionally executed hack allowed an anonymous actor to manipulate the price of Inverse and help themselves to an exclusive deal from the ETH-based lending protocol. How did it happen? So the skinny is $15.6 million was stolen in the form of 1,588 Ethereum, 94 wrapped Bitcoin, 4 million DOLA tokens, and 39.3 Yearn Finance tokens. First of all, the exploiter withdrew 901 Ethereum from Tornado Cash. Then they transferred 1.5 ETH to 241 clean addresses via Disperse and deployed 5 different smart contracts, of which only one was real. He then swapped 500 Ethereum to 1.7 thousand Inverse, so that it went through the INV wrapped ETH pair on SushiSwap, significantly changing the price due to low liquidity. It was a 50x. At the same time, he began spamming transactions with an exploit to be the first to get into the next block to get an inflated price from SushiSwap. The Inverse Finance Oracle through Keeper Network ended up using SushiSwap TWAP as an oracle, returning the price that made the INV token on the platform incredibly expensive. The attacker then deposited his 1.7 thousand INV, a fair price of 644K, as collateral and permanently borrowed $15.6 million. And then here, if you want to see, there is a flowchart visualization of how this actually occurred. Really good information. And then some code snippets regarding the differences between price and how the hacker exploited these price vulnerability differences in order to pull off this exploit. It continues, we would prefer that hackers take the weekends off, but at least this wasn't another case of compromised keys. Inverse Finance has since released their official statement, and several knowledgeable community members have pointed out the complexity and efficiency of this attack technique. Flashbout himself, a crypto security expert, stated that the Inverse Finance hack is one of the most MEV, and that stands for minor extractable value, aware hacks I've seen. The attacker held an oracle's price at an insane level across multiple blocks, prevented our bots from bringing prices back in line, and protected against generalized frontrunners. Chainlink God, who always has something to say when an oracle is exploited, also pointed out that relying on TWAP oracle generated from a single thinly traded DEX trading pair with a short-term time sample compounds market manipulation risks. After the attack, in Twitter Spaces, the Inverse Finance team stated that they are working with Chainlink to launch an Inverse token price feed once liquidity requirements have been met. This would then replace the current TWAP oracle. Although these risks are obvious in hindsight, it's clear that this was not an amateur job. Even the best in the business wear black hats sometimes. Maybe it's better not to aggravate them. And so, in sum, this is one of the most complex exploits. Even a lot of industry security experts agree this was probably one of the most complex exploits in the history of the blockchain. They were able to manipulate the price on an oracle and keep the manipulated price at the level that they intended throughout the course of a few subsequent blocks in order to generate an MEV style attack on this protocol. I mean, it's just, this is next level security manipulation here. So now that we've done an overview and a deeper dive into the technicals of how this occurred, what are our takeaways from this? I think first and foremost, it's becoming a reoccurring theme with all things DeFi. You have to do your research before you get in. But even if you do, sometimes that's not enough. I mean, you could be an industry expert, with a background and years of experience in blockchain-related security and still not have been able to pick up on all of the details that led to this exploit. That's just the nature of this beast. There's just so many open ends into how these protocols can be attacked. And as some of these articles stated, this wasn't just another case of hackers getting access to admin keys and using that as part of their exploit. This was a very complicated minor extractable value type hack that it operated on so many different levels in between manipulating an oracle's price, cleaning the money through Tornado Cash, using Disperse to disperse it to all of these different clean addresses, doing buys on Uniswap, the decentralized exchange. It's just, there was a lot going on here. And even if you are an expert in this field and you've done your due diligence, still sometimes you can't protect yourself from this level of exploitation, and that's why DeFi, it's still, in my mind, it's the wild, wild west. And I'm very, very, very cautious to put, more than a small percent of my bag at any given time into these DeFi protocols, because you could engage in best practices and still end up the victim of one of these types of exploits. And so that's why things like, yield farming and just DeFi in general, you have to be very, very, very careful anytime you play around with this type of these types of protocols. And in terms of the legal ramifications of this, as we saw the, I believe it was Yearn Finance, or Inverse Finance rather, Inverse Finance, the Inverse Finance team, they are intending to reimburse the affected users. So, I mean, I'm sure they might have some money in their treasury or whatnot. And I assume as much, if they had to have a governance proposal to try to reimburse the affected users. So that's good. At least they're trying to make people whole. If they end up making their customers whole, the users that were involved in this, then they would mitigate any sort of, or the vast majority of liability that they could possibly incur in terms of civil lawsuits or civil litigation against either the executives or the protocol, the DAO, whatever organizational structure they have. Because if they make the users whole, then that would mitigate any possible damages incurred by those users. And so the only thing that the users would really have at that point in terms of a civil claim would be loss of opportunity cost of their funds. But at that point, it really wouldn't be worth it for them to go through all the headaches of litigation if they're going to be made whole, just to make up the difference in the opportunity cost, which would be pittance in terms of the actual principal that they would be reimbursed for. And as always, with these types of exploits, there's always criminal risk for the hacker. He's probably facing a multitude. If he could be identified, it seems like he knew what he was doing, or they, or he, or she, whoever the anonymous exploiter is, they knew what they were doing. And they covered their tracks. They're using these mixing protocols, nothing centralized, so it was clean money in. It seems like there's clean money out, so they use Tornado Cash in the in and the out. It wasn't that much in terms of other hacks that we've seen, like 500 million from Ronin. This was only 15 million, but it's still a lot of money. But I think that there's enough liquidity in the Tornado Cash mixer to clean this amount of exploited funds. So if they were to get caught, they could face, wire fraud, mail fraud, theft, a whole litany of different charges, I think both felonies and misdemeanors. But I think it's probably unlikely that they're going to get caught. If they were to face a civil case, they would have potential liability for the civil cause of action conversion. That's essentially civil law theft. You stole something from me, now you have to make me whole. So that's the legal ramifications of this whole case and the potential risks and liabilities faced by the respective parties. But this one was really interesting to me, just in terms of how the hackers or hacker, whoever it was able to pull this off. This level of complex MEV hack, I've never seen anything like this before, and this is going to be the norm. I think once this playbook is out there, surely I think a lot of different protocols are going to race to try to close any sort of loophole related to this type of exploit. But it just laid a new foundation for types of exploits that could potentially be manipulated and leveraged in the future against DeFi and DeFi protocols. So with that said, I hope you guys enjoyed this content and learned something from it. As always, if you enjoyed this, please hit that like button and subscribe to our channel. We'd really appreciate that. And with that said, thanks again for watching, and we'll see you all in the next video.